Okay, now let me switch to English because now we are starting our journey on various kinds of digital ecosystems. Obviously, these ecosystems we have been showing you in the morning are also very important. They are focused on this experience part of our world. And now we'll move a little bit more into this world of frictionless processes, of frictionless relationships, and frictionless economy. And there is probably no other asset that is more sensitive to friction than money or economic value. So our aim today was to present you with one of the most exciting initiatives in this world of distributed finance using blockchain as their founding technology. By the way, a project which has a significant and Polish connotation, and which is one of the first, or if not the first, such initiatives in the world of distributed finance. And let me welcome on your behalf, and please give a hand to Lasse, who is head of integration in MakerDAO, a premier distributed finance organization. Hello, Lasse. So I'm very glad you had the opportunity to visit us today. It's head of integration. What does it mean, really?
So we have a team that helps our business partners with integrating with our products, and we provide them with the tools they need to do that.
Okay, so another ecosystem, this time ecosystem which is growing independently of traditional banking infrastructure and traditional financial services infrastructure. I'm very excited to hear a presentation. I have browsed through a number of videos on YouTube, and I still am not sure that I know how you actually earn your lunch in MakerDAO, but it will be great to hear you. Lasse, the stage is yours.
Okay. Thank you. Yeah. Thank you so much. So my name is Lasse. I'm originally Danish, so unfortunately I cannot do this in Polish yet. Maybe next time I come here. But we do have a very important team in Warsaw of about 10 people who played a very important part in building our protocol and still do. But I'm going to introduce you to Maker. And Maker is the organization and the ecosystem and the system itself, and then DAI, which is our stable coin, a digital currency built on some of the same technology as Bitcoin, but crucially, our DAI is stable, so it has a soft peg to the dollar, and we'll get into some of that. But all of this can be a little bit abstract, and even after watching a lot of YouTube videos, maybe it's still a bit weird. But so let's start with something more concrete, which is I'd like you to meet my friend Jen. Jen is from the Philippines, and she moved to Denmark to work. And every month she sends money home to her sister, who still lives in the Philippines. And right now, according to the World Bank, sending money across borders to developing countries costs an average of 9% in transaction fees. So 5 years ago, I moved to the Philippines, and we started a company to make money transfers cheaper. And we managed to get the cost down from about 9% to just about 2%. And we did that using blockchain technology, and at that time, more specifically, the Bitcoin blockchain. So we managed to get it down from about 9% to about 2%, but it was still a bit awkward dealing with a currency that is so efficient at moving across borders, but it's still very volatile, going up and down in value very quickly. About 2,000% per year of volatility can you expect from Bitcoin. So that's a problem, and I also started to think about how can we solve this. And this is where DAI comes in. I didn't invent DAI. But I had this idea, probably someday we'll need stable currencies on blockchains, and I expected that it would happen first by governments or central banks issuing their own currency on blockchains. But several years passed and this didn't happen, but then I learned about Maker and I thought this was so interesting that I decided to join this project. So DAI is the first and biggest decentralized stablecoin. So that means it has a soft peg to the USD. It doesn't always match exactly $1, but it's within 2 or 3 cents, because it's depending on some market forces to actually stay close to the dollar. It's backed by hard assets, so that means there's actually in the system other assets that are locked to back the value of DAI. So currently, it's only other cryptocurrencies that are locked in the system to back the value of DAI, but actually on Monday, we will launch the next version of our system, which allows for other types of assets to be deposited, which could be tokenized gold, tokenized stocks, tokenized bonds, and other kinds of hard assets. So what we get is actually all the advantages of blockchain: very efficient money transfers, programmable money, transparency, and an open financial system where anyone can access these very powerful tools. And we do away with what has been the main disadvantage of blockchain so far, namely the volatility. And we maintain no central point of failure, because it's decentralized. And you may have heard of other stablecoins. The one with the biggest market cap today is called Tether. But perhaps the even more famous one is Facebook Libra, which hasn't launched yet quite. But the important difference between these projects and our project is that the centralized projects rely on one organization or a committee of organizations that hold custody of the assets backing the stablecoin, and you must trust that they behave in a way that is satisfactory, and you must trust that they behave in a way that that governments also find acceptable. But we're decentralized, so anything in our system is open and can be audited, and anyone can go and see that exactly that amount of assets that we claim to be backing the system, everyone can audit and verify that those assets are actually in the system. Anyone can do that. So at the core of how DAI, our stablecoin, is issued lies the concept of a collateralized debt position, or a CDP for short. So I'll spend a couple of minutes showing how that works. So we have Maker, which we could call a decentralized central bank, which sounds like a bit of a paradox, but it's more or less what we do. But what we do is that we publish an application on the Ethereum blockchain. So this is an application, a piece of software code that lives on the blockchain, and it runs in this blockchain network of thousands of computers. Then we can have another party, Alice. Alice owns different types of assets. So it could be Bitcoin, it could be Ether, it could be a deed to her house, it could be a digital gold certificate. And we can say that these assets have a total value of $150. Alice wants to draw some liquidity from this. She doesn't want to sell these assets, but she wants to get some liquidity from them. So she can deposit these assets into the Maker decentralized central bank, and now they're locked in our system. Now our decentralized central bank can create, for instance, $100 worth of DAI stablecoin, which can then be issued to Alice. And you can see she locked $150 worth of assets. She gets $100. This is just an example, but it's to show that our system always requires that you deposit more than what you claim. So in some ways, there are differences, but in some ways, it's sort of like getting a mortgage on your house, right? You have a house, 100,000 euros, and you can take a mortgage of 50,000 euros, for instance. Now, what happens if these assets, the $150, what happens if they decrease in value? Well, then the system will perform a liquidation of this debt position. So if that happens, the system will put these assets in an auction and sell them until the system raises $100 in DAI stablecoin. And then those $100 worth of DAI stablecoin raised from the auction can be burned, can be destroyed, can be deleted. And then the returning assets, $40, $50, can be returned to Alice. So in this way, the system makes sure that it always stays liquid and over-collateralized. Now, Alice has $100 worth of stable currency. She can spend it like any currency. If she's buying a pair of shoes from Bob, she can send the $100 to Bob, and Bob doesn't need to know anything about the decentralized central bank or the collateralized debt position. To Bob, this is just regular currency that he receives, and he can treat it like any other currency. But if he wants to investigate the system a little bit, if he wants to find out what is my guarantee that these coins actually have a value of $100, then he could look into the system and he would find out that if the value of these coins in the marketplace would ever deviate too far from $100, let's say they fall in value to $90, the ultimate guarantee in the system that Bob has something worth $100 is that if this happens, he can return the tokens to the maker decentralized central bank, and it will then pay out other assets worth $100. So that's the ultimate guarantee that you have a token of real value and of a stable value.
So the risk is always on Alice's side, if you think about currency fluctuation.
What Alice ultimately wants to do is to pay down her debt position. So if these fall in value, she wants to go buy them at a lower price, and now she can repay her loan at a lower price than before. So that's also one of the stabilizing mechanisms in the system. But another stabilizing mechanism in the system is that Alice is paying what we call a stability fee, which is paid to the system. So currently the stability fee is about 5% annually, and the governance of the system, which we'll get into in a bit, the governance of the system can raise or decrease the stability fee to make it more or less attractive to generate debt positions, to generate DAI stablecoin, and that's also another mechanism to influence the supply of DAI and thus the price of DAI. All right, but that's the basics of it, and you can see this is not just a decentralized stable currency. It's also a decentralized debt mechanism or a credit mechanism, which when I learned about this was incredibly fascinating to me, and still is, that you can generate liquidity against your assets without having any counterparty. There's no bank as a counterparty, there's no person as a counterparty. The only sort of counterparty is the software application which we have published on the blockchain and which we actually no longer control. It's just running by itself. So that's an entirely new paradigm of how to generate liquidity against assets you have, which I think is very fascinating. So we have DAI. It's liquid. It can be traded on the biggest digital currency exchanges in the world. It's backed by hard assets. It's stable. Then the one additional important thing you need to know about is the MKR token, which is the governance token of the system. So anyone who holds MKR participates in governance and assumes risk. I mentioned the stability fee before, which you pay when you create a debt position. You pay a stability fee when you create a debt position. The size of the stability fee is decided by the holders of the MKR governance token. So right now, on a weekly basis, they're voting what should the stability fee be? And the dominating influence on this is the price of DAI. So if the price of DAI is below $1, then we want to decrease the supply of DAI, and thus we increase the stability fee to make it more expensive to generate DAI, and vice versa, if the price of DAI is above $1. They also assume risk, because if there is a black swan event, a catastrophic event, where all the backing assets in the system, if they fall in value very quickly at the same time, and the system cannot liquidate positions quickly enough, then the MKR token holders will pay for the bad debt in the system by the supply of MKR tokens will be inflated and will be sold on the market to cover the bad debt. So that means if you hold MKR tokens, when the supply gets inflated, your token will get worth a bit less. So that's how they take on this risk. They are compensated by this risk by receiving a portion of the stability fees that are paid in the system. The MKR token is inherently unstable, so this is not a stable asset. It's purchased typically by people who want to participate in the governance process, but also some VC companies that believe the entirety of the system can grow, and thus they may receive more instability fees in the future if they purchase MKR tokens now. So that's the basics of the system. Right now there's about $100 million circulating in DAI. This current system has been running in a test version for 2 years. The real version of the system is what we launched on Monday. During the lifetime of the system, about 420 million DAI has been generated, and that's in 2 years. If we compare to the biggest peer-to-peer lending platform that has been created before, which is Lending Club, as far as I remember, it took them 5 years to generate $200 million. From that perspective, we've been growing very, very quickly. And right now there's about 2 million ETH locked in CDPs. ETH is the cryptocurrency on Ethereum, which is about 1 or 2% of the total supply of Ether. So this gives us, of course, seamless global transactions with very quick settlement, low transaction costs, programmable currency with a stable currency. It's decentralized and trustless. We have a POC at Maker where we're doing more than 1,000 transactions per second, so it can actually also scale to very high volumes. But perhaps even more interestingly, this also opens up the blockchain and decentralized finance to the world's biggest financial market, which you haven't been able to do debt and loans on the blockchain before because you only had Bitcoin or Ether. And if you take a loan in Bitcoin today, then in 1 year, the value of your loan might be 10 times as much, and you owe 10 times as much, and then you go bankrupt. So it's just very, very impractical. But now you can do debt on the blockchain, which makes sense. And this is $200 trillion that now can be done on the blockchain. And I think that's going to be incredibly powerful. And it's going to enable debt and credit for those 50% of the adult population of the world that don't have bank accounts. Because you don't need a bank account to use this system to generate debt. Anyone can do it, just with a simple phone. One thing we're also introducing on Monday as a new part of our system is the DAI savings rate. So until now, if you've been holding DAI in your wallet, you haven't received any savings at all. It's just been that constant value. But on Monday, you'll start receiving continuous savings payments into your account. We'll probably start around 2%, but it's expected to increase. And this is also the first time ever that anyone anywhere in the world has been able to go and claim a wallet on a simple phone and start earning a savings rate. So that's going to be incredibly interesting. And it's paid by the stability fees of people who create debt positions. So part of the stability fee goes to MKR token holders who govern the system, and the other part of the stability fees go to DAI holders who just get a savings rate for having money. So, a quick note on governance. Like, what's an example of how this governance process works? So, the governance community decides on the stability fee, but they also decide on what types of assets can be used as collateral in the system. So, for instance, if you want to collateralize your house and use it as an asset in the maker system, you would first bring your house to a tokenization partner. They would tokenize your house. They would post an application to the Maker Governance Forum, which is just a forum we have at forum.makerdao.com. One of the risk teams in the foundation, we currently have a risk team, would perform a risk assessment of the token and determine risk parameters, so like a stability fee and other risk parameters. Then there would be a vote in the MKR governance where people would vote with their MKR coins on approving this. And then you can create a CDP and draw DAI against your house. So, it's not a one-click process for tokenizing your house, but the important thing is this is only needed per tokenization partner. So, all of these steps is only needed once per tokenization partner, and after that, it's just actually tokenizing your house, and then you can use it in a CDP. And it would be the same for stocks or bonds or precious metals. Once the tokenization partner is approved, anyone can take it and use it as collateral in our system and get one-click liquidity. So, my last slide. Our dollar DAI is just the beginning. We're planning on also launching a euro DAI, a pound DAI, yen, the Chinese RMB, as DAI stablecoins. And one day, perhaps even a consumer price index DAI, which could potentially be the most stable currency in the world, because we would not be tracking any government currency, which governments have agendas like unemployment rates and so on. They have other concerns than only stability. But if we track a consumer price index with a basket of goods, like milk and bread and cars and clothing and so on, we could have the most stable currency in the world. And obviously, the Polish currency would also be a candidate here. We can even push it a step further and create synthetic assets. As long as we have a price feed of something, we can create a DAI token that represents it. So if we just have a price feed of a stock or a bond or a gram of gold or anything else, we can tokenize it and issue it as a DAI token. So those were the words. I hope it made some sense, and I'll be happy to answer any questions when there's time.
Thank you, Lasse. Take a seat, please. My first question goes really to the audience. Is anyone having a question that you would like, or she would like to pose, please? For internet, there was a question about who is actually the tokenization partner.
It could be a bank, but it's not limited to a bank. But for instance, if you have a house, there are companies in many countries right now that are working on tokenizing houses. In the US, in Germany, in Denmark, maybe also in Poland, though I haven't heard of them specifically. And it depends on the type of asset, right? Because for some types of assets, you need regulation in place. For instance, if you're tokenizing stocks, but if you're tokenizing art, there's no regulation on art. Or if you're tokenizing a Stradivarius violin, which I know there's a project called Materium, which is tokenizing these types of assets, then there's no regulation either. So it depends on the asset, and it could be many types of companies doing it.
Okay, another question here? For internet, question about the number of nodes and their localization.
So we don't have our own blockchain, so we don't have nodes in the traditional sense. We build on the Ethereum blockchain, which has nodes everywhere. But perhaps the parallel in our system to nodes would be the MKR token holders, because they govern the system, right? And it's an open market. Anyone can buy and hold MKR tokens, so it's also very distributed, and they're based in every jurisdiction. Some of the bigger holders are VC companies who purchased MKR tokens. For instance, Andreessen Horowitz purchased 6% for 15 million. So they're now participating in the governance process, I think very soon, if they're not already doing it. But those are some of the bigger holders.
Okay, one last question here. So the question goes about how do the traditional financial community will react to this kind of mafia offer, as they call it in marketing manuals. That is an offering that is simply too good to be unaccepted by the customers.
Yeah, it's a good question, and there's of course different players in the traditional financial ecosystem, but one thing we can offer here is very efficient international transactions, right? And a lot of banks are very interested in how can they make international transactions more efficient than what they can do today with SWIFT and so on. So that's one example. And then of course there's the regulators, and you can never predict what politicians will enact, but the relationships that we have today with both European regulators and in the US, I must say it's very good. They're very interested in how can this make finance more open, how can it make transactions more efficient, and how can it create greater transparency in the end, so it actually also becomes, in some ways and in many ways, easier for regulators to do their job when you have transactions on the blockchain rather than when they are in legacy systems. So I think all the signs are looking good on that in that area.
Okay, I have some questions, but I will limit them really to two. The first is related to business model, rather. So how do you expect the use cases to evolve? Because basically we don't take loans just to keep the money in our wallets. We usually take advantage of this loan capability to achieve something. So I mean, what kind of transactions? What is the sweet spot for using DAI as a currency?
Okay, yeah, there can be many applications, but of course, holding DAI and spending it, you can use it like any currency. So you can spend it online, or you can just hold it as savings. So that's one type of using DAI. But if you're creating CDPs and you're drawing liquidity, that opens up another type of use cases.
Behavior.
Yeah, including leverage. And to give another example of traditional financial institutions that have seen something interesting in this is, if you can take stocks or real estate and you can deposit it in our systems and you can generate liquidity, then you can exchange these new DAI tokens into more of the stock, and now you're leveraged on your stock position. And then you can put that stock into the system again and generate even more liquidity. So you can do this recursive mechanism where you get more and more leverage until you reach a ceiling of what the system permits. And that's actually how many people use it today. They generate leverage on crypto assets, because so far we only have crypto assets in the system, but we will get regular assets as well. So that's one way it can be used.
So basically, the things we are collateralizing should be rather things that we intend to keep for a long time, whereas the DAI is used to high volume transactions behavior. Yes.
Yeah, the users who create CDPs and generate DAI are typically entirely separate from people who hold DAI and spend DAI. They're very different users. The people who create CDPs are typically more advanced, while people who hold DAI and spend DAI are just regular users who need money for whatever purposes. And but yeah, one of the advantages of just having DAI versus having dollars or euros is obviously that you can send it anywhere in the world, and you can do that even with a fraction of $1. You can send it to Australia, or to China, or to Brazil, and you can do that with 10 cents, and that just wouldn't make sense if you need to do a bank transfer, right, where you need to pay 5 or 10 euros in fees.
So micropayments and
Yeah.
this kind of fees. Okay, thank you. Now my last question is really about the governance, because we understand that the maker community is kind of distributed governance board for the DAO, whereas in traditional banking systems, you have these governing bodies in central banks. Sometimes it's even more complicated. In Europe, we have Euro, but it's managed by actually a number of central banks. So it sometimes gets good. But my question is, I mean, do you really believe that the wisdom of crowd will be more efficient in managing the risks, these market risks de facto, especially when you are trying to add collateralization options that include things that may have more complex volatility schemes than USD?
Yeah, it's a good question, and I don't think I can give the definitive answer, because it's the way we do it with a DAO, a decentralized autonomous organization where anyone can purchase the MKR token and participate in the governance process. It's something quite novel and new, and so we don't have a track record where we can point to 50 or 100 years of experience of doing this. But one very important aspect of this that makes me very hopeful and very excited about it is that once you purchase MKR tokens, you also have a stake in the system. So you're incentivized to make good decisions. If you make bad decisions, then the DAI supply will decrease, or there will be an event where there's bad debt in the system, and the amount of MKR tokens will be inflated to cover the bad debt in the system, and that means your MKR tokens will lose value and you pay for it. So, whereas if you make good decisions, then you will attract more people to the system that will create more DAI, which will increase the amount of stability fees, which increases the value of your MKR tokens, so you're paid for good decisions. And I think, so you have stake in the system, you have skin in the game, and I think that seems like a very good improvement compared to how most central banks work, where you get your salary and maybe you even get your bonus, even if you make mistakes. Whereas here, you're really incentivized to make good decisions.
So basically, an equivalent will be to incentivize governance bodies with bonus for GDP growth, something like that, yes?
It's one idea.
Not a very good one, probably.
But of course, you always have to be careful what you optimize for. Yeah.
Yes, that's it. Okay, thank you, Lasse. And I'm leaving you with Sylwia, and I'm switching over to Sylwia. Sylwia, zapraszam do ambony. Thank you very much.
Okay. Dzień dobry, witam wszystkich serdecznie. Mam przyjemność prowadzić, dziękuję bardzo za zaproszenie. Mam przyjemność prowadzić panel dyskusyjny pod tytułem Redefining Finance and Economy with Digital Ecosystem. And I'm very happy that Lasse is part of that panel. Thanks for bringing us into the stablecoin and the entire crediting in that ecosystem, which is quite new. I am very excited. I would like to also invite Marat Azatjan, who is the business development at Revolut. Just. The best multi-currency card, how should I call it, Marat?
Yeah, it's fine.
Yeah? Okay, and Tomasz Jakubczyk, strategic business development for Cashap. Cześć. Lifestyle app for Generation Z, is that correct? Exactly. And Krzysztof Pycia, sales director at Blue Media. Payment service provider, actually the financial services ecosystem of based on everything, peer-to-peer, Elixir, like a Blue Cash, everything, a lot. The panel will be in English, then sorry for my hard Polish accent. But I mean, we have some guests, and I think that will be the most appropriate language. We have many topics we can cover today, but there are a few things which I think may be quite interesting for many businesses. And I would like to have some a short discussion around the regulation. And I just want to quote quite an interesting guy. His name is Jack Ma, the symbol of Alibaba. And when Europe introduced GDPR regulation, he said, Europe, everything you start to worry, you make a rules and laws. I worry about Europe, and I worry about the worries of Europe. And actually, September this year, September, we've planned, I would say, to introduce everything around the PSD2. And I think there have been a lot of said about the PSD2. And it's supposed to give us the open banking, and it's supposed to give us a lot of security in users. Many of those, I would say, might be a little bit controversial. I would say failed. A lot of waivers, postpones, and etc. And open banking also seems to be a little bit a dream for future. What would you say about that? Is it killing the innovation? Is the regulation in Europe really giving us some support? Well, what is your opinion versus China and US, where we haven't seen something like that? Who wants to start? Marat?
I'm not sure. Yeah, it works. So definitely if the regulation helps the customer, and by customer I mean the safety of transactions and how he can manage money he owns, definitely it's a good thing. On the technical point of view, to make a regulation which touches upon the topic which is so dynamically evolving, that is a difficult thing. So the regulators for sure have a pretty tough task to do. And obviously, when the regulation is being consulted with the businesses which are afterwards using it, then in my view, that's the best way to proceed with that, because very often those regulations may not be 100% adequate to the needs of both customers and companies which are the service providers. So to sum up, yeah, regulation is good, but when it answers the basically needs of both customers and service providers.
Thank you. Krzysztof, open banking, what do you think about that? I mean, that for PSP, that might be a little bit of a great idea for the development of the business.
It's definitely a great idea, but I wouldn't agree fully that it's a good regulation. The goal of the regulation is great, to open the banking, to open other services, and that's definitely the future. But we have the new regulation regarding the TPPs, the third-party providers, that started being effective with RTS entering in force 14th of September. The first two companies, among one, Blue Media, got full license for being a payment initiation service provider and an account information service provider a couple of days later, so we couldn't even start some things earlier. And actually, I would say that we make a testing on the production facilities because they are not well prepared, and this is across Europe same. So I believe that in 2020 there will be a very good offering based on that, and maybe a new quality on the market. However, we have to wait for that. This is one thing. The second thing, it's very difficult to say about some regulations because this is European regulations, and we have a very different market across Europe. And I don't think that Polish banks were less secure before PSD2. The Polish banks were very well secured, using strong customer authentication in the most sensitive areas. Now they are more regulated. I don't think it's more secure. It's less convenient sometimes, but there is potential for getting better offer to the client. And that's the goal also of some fintechs like we, to provide services to banks to make it better.
Exactly. Tomasz, maybe a little bit about the app. Is that influencing all those regulations, user experience in your area, or you don't see the influence on the new regulations in that area?
For me, the regulations are very good steps towards democratization of financial services, but after the regulations, bank will be banks. So more compliant, more regulated, less fun space for doing a banking. And those newcomers to the industry like FinTech, startups, big techs, there will to remain a more fun space to do banking and finance. So the question is whether there is a space for genuine partnerships between banks and the newcomers. In my opinion, yes. And we see it through partnerships such as Google with Citibank, Goldman Sachs with Apple Card, JP Morgan with Amazon credit for SMEs. So, as Krzysztof said, the banks were secure, they are secure, and then there will be secure, but there will be a different top partners that more entitled to provide fund to the financial segments, and I think the regulations are just right, but we need a bit more time. When we go back to the early days of open banking, it is another standard of open banking in UK. 2 years ago, there was a survey, and the customers were asked, are they ready for open banking? So most of the customers, 50% or more, if I'm not mistaken, answer they don't know what the open banking means. Yes. And 0.5% of those 50% answer, I'm a bit afraid of granting the access to data to the anonymous entities. So it needs time.
Thank you for that. Maybe let's move a little bit away from the regulation. That's a really boring topic, and as we can see, it's not really giving us.
I have a quick comment, because I think you can also, I think regulation also always have some unforeseen consequences, of course, and PSD2 is opening up innovation on some fronts, but it might also inadvertently be limiting innovation on other fronts, like. Yes. In online and in advertising and social media, we've seen this business model grow around monetizing data, right? And some people like it, some people really don't like it, but it's a new business model, so it's an innovation. And if there hadn't been PSD2, there might have been a similar event in financial services and banking where, since you own the customer data, you could have banks that charge very low fees on transactions and other income revenues, and then just made money from data. But since you're now opening up all this access to information through PSD2 to everyone, then those sorts of business models will likely not evolve in banking and financial services. So I think there's always a disadvantage to everything. And then at the same time, as a blockchain person, it's interesting to me because it's sort of the banking system approaching blockchain in some ways, because what I see blockchain doing is opening up access to a global financial infrastructure. Yes. To anyone, any small entrepreneur that wants to access it can just plug into the blockchain today, right? But until now, it's only been the biggest banks who could do it, but now PSD2 is sort of approaching what the blockchain does there.
That's a connectivity, yes? Providing through the cryptocurrency, and then the open bank, you should provide that. Okay. You are representing, actually, all of you, gentlemen, you're representing the FinTech space from the different angle. And actually, we are trying to put that in this discussion also, how this is perceived and how it's doing versus the bank and the traditional industries. And in 3 points, banks are really suffering, especially from the legacy infrastructure, a lot of the culture which has been embedded for years, and also disengagement of the employee. I mean, this is the way they work. at the same time, FinTech, what they are struggling the most is the scalability. How to scale abroad, within the country, within the segments. And I would like to touch that point. Do you see the success? What would be the success factor? How to scale and to take advantage versus the banks?
Yeah, so I may take that.
Yeah.
I strongly believe that the product is the core answer to this, and the product needs to solve the issues, the difficulties which the customer are facing. And at Revolut, we did basically that. We've seen what was not perfect. We thought about our solution to that, and we tried to make it as easy, as seamless, as inexpensive as that is for the customer. That's how we were able to scale from 0 to 9 million customers, basically within 4 years. So that might be an answer to how to scale globally. The product needs to solve those pain points, but also it needs to aim global from the day one. So with our product, the only thing you need is the smartphone and internet connection to use the advantages of the banking services and payment basically in every aspect of customer needs. So that would be the main answer from our point of view, but also constantly innovate. So not only start with a good product, but constantly innovate. As this panel is about the competition, it's also about how you can stay innovative in this area. So it's not only about coming up with a great answer to current needs, but also try to foresee them and try to be and stay innovative.
And you've never had a scalability problem, like any problems within the Europe or other countries? Like what are the countries where you had the biggest problem? Is there any?
So far, we are present in 36 countries, and majority of them are in the Europe, but we also recently launched Australia and Singapore. That's our attempt to be actually a global player. Now we are also working to launch United States. So with the global scale, we will be able to use the full advantage of what Revolut aims to do. So to be a way to even transfer money wherever you want for basically no cost. So right now you can, like you said, Lasse, during your keynote, right now you can send money with Revolut to someone in Australia. You can send $1 and pay nothing for that. So that's the main advantage of us being a global player, being present in all of the countries, to give our users the ecosystem which benefits them in a way that makes those transactions seamless, super fast, and basically free of charge.
Exactly, because remittance, basically, there's a fee, and you're providing that with that. And what I understand, no problems with the scalability.
So far, no. So far, we are super happy that our product really delivers. Our users are super eager to refer it, and to the word of mouth supported with marketing activities helps us to grow really rapidly.
Perfect. Lasse, can we talk about, like, is there any, like, a geographical border for your solution? I mean, do you have any problem with its scalability? Is it such a frame even?
Yeah, so I think any company or organization that is born on the blockchain and starts out with the blockchain has a big advantage in scaling worldwide because it's a global infrastructure. One example I think is that we've grown very organically in Argentina without making a big effort ourselves. But it just happened by the fact that the Argentinian peso was dropping so fast in value because of the hyperinflation that people just dynamically or organically started using the DAI stablecoin more and more in Argentina. And that's without us deploying any infrastructure in Argentina, without setting up any extra legal entities in Argentina. It just happened because we were born globally on the blockchain.
Exactly. Then for you, there's no borders. No regulations yet disturbing you, or anything that you noticed in any country?
So for the DAI stablecoin, no, it's been very straightforward so far. No issues there. There might be, I don't know. Well, one part of what we do is also that our Polish team, what they actually did, our Polish team, is that they built the first decentralized exchange in the world, I think, and it's one of the top 2 today, if not maybe it's even number 1, where you can trade digital assets, and there it seems like there's going to be regulation on how you present this product to your users. So if you're running a website where people can easily access this, then you might be regulated. So far in providing our DAI stablecoin, it seems quite straightforward.
Yep, exactly. Okay, Tomasz, yep. Would you like to refer to the scalability?
Yes, in terms of scalability, I would like to underline 3 points. Quick one. First one is, if you're a niche player, as we are, we have to take into account a different market approach to what is really needed for the market. In terms of US, for example, there is now, I reckon, through the conversation we had last week in Lisbon, there is a big shift, in my opinion, from technology and functionality of the apps into the brand and the lifestyle. So we've seen a very, very big interest from the US accelerators, mentors, and investors into apps that are more about lifestyle and the brand. So this is the first point. The second point is about, of course, data. So how you look into the data, whether you are able to actually harness the power of the daily data of customers, how they actually breathe, behave, and based on that, they build. We are going to build something more interesting and like an invisible kind of banking. And the third point is more towards a startup itself, and even more towards the founder. It's about who are you going to be in the future, king or cash? And from our investor from US, there's, I think, they prefer to capture cash and not to cause any more trouble being a king, not able to, put other two people into the board, that sort of. So those 3 points I would like to emphasize.
If you could tell us a few sentences about the company, like when you started.
2018.
2019.
In December, so we
1 year.
No, yes, almost
1 year.
1 year, and we launched MVP in Poland. But we, as my more experienced colleague from Revolut mentioned, from the start we thought about going big globally. So we just started exploring what kind of market would be the most, let's say, convenient for us. And
which are the markets that you're considering? So probably one of the Nordics, or DACH, two countries, so Austria maybe. But we also capture a lot of attention from US, but what they say to us that we are a bit too early, because for all the startup founders sitting in the venue, the key assumption from the US investor would be, do you have at least 12 months runway? So the money to be there, to launch your product there, and that's it, yeah. Okay, then you're really looking towards the global.
So we would like to scale a little bit across Europe and then US. And of course, just one, the last note, we also look into the different markets, and very interesting market we really think is Brazil at the moment.
Definitely.
Just to, I don't know, most of you are aware of this, but what is the most downloaded financial app in the world? It's not Revolut, unfortunately.
Not yet.
Yet.
WeChat?
most downloaded app in
You
the
mean the
world?
digital bank,
Yeah,
which
yeah,
is
yeah,
the
yeah.
most? I know it's from Brazil.
Yeah, new bank.
New bank,
Yeah,
You want?
yeah, exactly.
It's just the circumstances of Brazilian banking market.
Yes.
Yeah, yeah.
I've-
So
yeah.
very interesting market. Yeah. Thank you.
Thank you. And Krzysztof, Blue Media is located in a very nice place in Sopot, and
Fantastic.
with a fantastic view. How about the problems with the scalability and the plans for the scalability? How do you see that for the financial services? Is it scalable, or is it particularly caught in the regulations of the country?
Talking about scalability, on one thing, everything that is technology, and with the technology, scalability is not a problem today, or since a couple of years, we can say. Talking about business model, the key thing is to make a healthy business model and to scale the healthy business model. We at Blue Media work often with partners. It's like we support banks in many processes, and some of our services we also leverage the banking network. And a good example is in AutoPay. This is the service that in a couple of months allows drivers to use seamlessly A1 highway in Poland and A4. On A1 now it's like 15% uses of the highway opening the gates, it's with AutoPay. So and there was not a lot of marketing. Today it's our app. I welcome you to download it, install. It's on both Google and App Store. It has great ratings from the customers, and you can use it simply. Or you can go to banks. Now it's Bank Millennium. There is a couple of banks working already to implement this service directly into mobile banking. So we provide another benefit for the banking industry, where like the PSD2, there is a risk that the customer will spend more with third parties or providers. So the banks wants to provide more value to the customer. One of this strategy to provide more value is to provide value-added services, just like AutoPay. So the customer, if wants to make something that is connected with money, he will be able to do it at his bank, simply saying, I want to use AutoPay, and that's virtually all.
Are you focused on the Poland only, or any plans for further expansion?
It's a big interest in AutoPay across Europe,
Across Europe.
and not
For this
only,
one
but
product.
currently regarding the production service, this is Poland.
Okay, then it seems it's not a problem actually. For other fintech companies, that's a big problem, but for my guests, it's not a problem. I'm very happy about that. We've touched a little bit of regulation, and is it a support or is it not support? And we say, yeah, in some cases. We've touched about the problems in terms of what are the threats for the fintech, especially in terms of the scalability. I would love to touch a base regarding the users and a few stats. PayPal, at the moment, 250 million users. Apple Pay will reach 200 million users in 2020. Global transaction value of mobile payment app is to reach $14 trillion. How quickly users actually are moving away from traditional payments, and especially for some generations, do they really need a banking segment? And having the technology like Revolut, or the technology like a blockchain or stablecoin, do we really need the banking for the generations that they are coming? Marat.
So as you said, we also noticed that the younger generation needs to be familiarized with all of the options they have for their transactions, either online or offline. One of the products which excites me the most, which are working right now currently, is Revolut Youth. So the bank accounts, or basically the personal accounts for people below 18 years old. That's one of the, I know that banks are offering that, but I'd love to share more details about it. It's a way how basically the current parents can teach their children how to manage their money, both in a way how they earn it, how they spend it, in using tech. So I assume that majority of the Generation Z, which was mentioned before, are now depending heavily on tech, on hardware, on devices. And to leverage that, to teach them how to manage their money properly, safely, and how to spend with good, let's say, how to spend money, but how to also manage money in a way to prepare them for their financial future is also one of the goals for us. And I hope that we will launch the product quite soon. I'm not sure yet when it's going to happen, but definitely, yeah, how people hold their money, how they are spending money, it will definitely change. It's already changing right now. For Poland, I can speak, let's say, for Poland. Last year, at this time of year, we would have in Poland much less than 100,000 users, like much years. Now we are over 750K. That's right now, I think, 8th position in Poland in terms of the customer base for bank and non-banking apps or institutions. So that shows that how people are using their money, how they are spending their money is for sure developing towards tech. And fintechs will have a strong presence in this area, for sure.
If I understand, youth card hasn't been launched yet anywhere.
Not
yet. Is Poland the first country you're going to launch, or you don't know yet?
Definitely, it's a priority market for us. However, yeah, we will be probably launching that in Europe first, and with countries which right now are the most important. Poland is currently the 3rd market for Revolut in terms of the customer base. So the circumstances around the needs for the local market in Poland definitely are very important for us when we develop those products.
What was not working in the bank system if you're saying that such a youth cards already exist in the banking infrastructure?
I'm not sure entirely what was not working well. It's mostly about what our current users asked us to develop for them. They were asking how we can give the benefits of Revolut to our children, because now we are offering the product only for the adults. So that was just our response to the needs of our customers. And as the product from the start was the customer-centric one, that's why our product developers decided to focus on it as well.
Krzysztof, you wanted to add something. I just see your
yes,
tongue
because
is burning.
the question was about young people, and actually most of the banks in Poland has offer for people like 13 years plus. But some of the banks offer also services for the newly born kids. So if a new kid's coming to life, I can go to some banks and create an account for them. Of course, it's legally something not really the account of this person, but formally mine. So the offer is on the market. Actually, for kids, it's as a rule, it's free. So the question is, what are the needs? If there are needs, maybe that are not attracted by the banks, then it will be a success. Because if you only just pay for the kids or something, they will maybe use it. But the question is, if they don't use it now, then we have to look like at the central bank statistics about the age of the user of the banking services. And actually we have problem not only with kids, but with the young people. Many people not using the banking account until they need it. And when they need it when they start to work and they have money. Because unfortunately many people don't have enough money, so if they have cash, it's just enough.
So maybe just to add one use case for it, because I'm aware that this product already exists. Many current customers are asking us, as Revolut is a global product, it aims to serve people wherever they are. One of the use cases which is the most striking me is when the parents want to transfer money to their children when they go whenever abroad, when they travel, when they go to study abroad, with this inexpensive way to transfer money and afterwards to spend money, to transfer money within seconds. That's one of the use cases which can be served with this product, which is not delivered yet. So I assume that on the surface, this product might seem similar or might seem even the same, but the entire, let's say, success or lack of success depends on how it's executed, how it's delivered in details. So we focus on the details. We don't launch products which are not ready, which are not perfect. We never settle. That's one of the foundations of our company. And that's why we aim always to deliver the best results and the most customer-centric product which solves different aspects of their needs.
I may add something. Before I go into more about Gen Z, their needs, pain points, what they expect from banking, I would like to emphasize one general statement. Throughout the history, the purpose of the banking has not really changed a lot. We changed the way we serve customer, but in banking, in general, there is still a fundamental misalignment of incentives. Not seen in any industries. It's like having a car company that earns profit when you make an accident. So now the customers, the new cohort of customers, they have a very different money issues. The banks so far have struggled to address. It's like a low level of financial literacy, student debt burden, or just underemployment or unemployment that to some big extent exclude them from raising a capital. So the banks, newcomers, the FinTech has really have to actually make a switch how we should address a finance per se to those young to customer. Generation Z is really big group. It's 26 billion of people across the globe that will constitute 40% of consumer base by 2020. And the purchasing power, even a direct one, is rather significant, $200 billion, even more indirectly through influencing parents. You know, I need this blue shirt, I need these new trousers, etc. So just to sum it up, the banking industry still is, across the globe, is still in the mode of banking as a product, so selling traditional banking products online, offline. The next step is banking as a service, which most of the banks would like to be, some already has to succeed. So utilizing API, offering different services from a non-traditional banking domain. And the third model, our Cashap, I reckon, just allow me to blow my own trumpet a little bit, is very close to, we are not yet there, is lifestyle banking. Some people call it ambient banking. So actually the ability to harness the lifestyle, the daily rhythm of customer and provides the banking and services, functionalities and payments somewhere from underneath. So we're capturing first the e-commerce. There's the place where the Generation Z is at the moment, and through the e-commerce we go and offer them some payments, to methods, some tips in terms of strengthening their financial literacy. So ambient banking is our aim, our goal.
Perfect. It's like a virtual, yes? Lasse, if I got it correctly from your presentation, you're actually offering the credit first time outside of the banking system. Because, I mean, you can really liquidate the assets you have, or you can even leverage the capital in the company, and et cetera, et cetera. I mean, there are many ways which have been reserved so far for the banks only. Do you see the future, especially of users, and how quickly they're going to adopt in area of crediting or in area of getting out of the banking system and the industry towards the stable coin or cryptocurrency? How do you see that?
Yeah, we see it as something quite different because there's no real counterparty, right? So I think the terms applied are somewhat different. So we call it that you generate liquidity from something, because it's not like someone is giving you credit because there's no counterparty. So we call it that you generate liquidity, and for some types or for some shares of the market, yeah, I think this will be very attractive, because you could say that in some ways our system provides many of those functionalities that where you would normally need several different players in order to achieve the same. So if you use our system to generate liquidity, you're not relying on an interest rate from a central bank. You're not relying on a credit institute or a bank on top of that. You're only using the software in our system. So we think our system has a structural advantage in generating liquidity much cheaper than you would do if you needed several of those other players. And so for generating liquidity against many types of assets, we think our system will be more attractive.
Absolutely, and especially for the business, might be for the businesses with a big portion of the fixed asset or really long term, not liquidated, to be liquidated.
Yeah, one type of asset we're looking into right now a lot is invoices and trade financing, right? So if you can generate liquidity against your future invoice payments right now with just one click, then we think that can be very powerful.
And that is it's a factoring, yes? You mean covering the debt, like not due debt, yes?
Yeah.
Which is, then actually your solution could be used not only for the B2C, for the users, but also for the B2B especially, that gives the security and the high liquidation of the assets, or future assets.
Yes. Yeah.
Very interesting. Okay, thank you so much. I would like to summarize the few points. I think we could stay here definitely till the end of the day and discuss many aspects of your businesses and the aspects of FinTech. We've touched the base a little bit about the regulation, and it has some aspects of potentially helping us, but not yet seen that, or at least in some of the areas. Secondly, the industry, the FinTech industry, even if there's a threat of the scalability or some limitations in that area, seems to be much better positioned than the banking industry, hopefully, and rightly. And the third one, the users, it seems to be in all the areas going quite quickly with adaptation to the new solution, which you showed and you explained in details. Any final word about what would you like to say? What's the future of the FinTech in the position to the banking, but not only to the banking, also to the tech fin, like Apple Pay, all the technology companies that are getting into the financial services. What's the future? What's the future of FinTech? Marat.
So I can speak just for myself or maybe for Revolut. So at Revolut, I think that the main aspect of success is to be a global player, first of all, but also to serve different needs of both B2C and B2B payments. So in the B2C sector, we have a quite good strategy and we know what our customers need. We also serve businesses, which is one of the products which is maybe not that popular so far because we started that around 20 months ago. But in the B2B area, we already have over 200K customers. And the main aspect here, which will define the success, is if we can leverage all of the learnings, all of the benefits from the B2C sector to the B2B one and combine them to, in some way, merge them to enable businesses which use Revolut to collect payments from customers which use Revolut, which would again be seamless, super inexpensive, but also convenient for them. So if I would think about the future of it, is to build an ecosystem which will serve all the needs to both businesses and customers.
Super, thank you. Lasse.
Yeah, I think two key terms are transparency, where everything will be more transparent and auditable by everyone, and then also openness, as in including everyone in the world will be able to participate on equal footing with everyone else. And I see some parallels with how the internet really equaled the communication and media, right, where Before you had these gatekeepers with TV networks and newspapers and so on, where if you wanted to reach a mass audience, you had to convince these gatekeepers first. But now anyone can publish a YouTube video, anyone can start a blog, anyone can post on Facebook. And I think we'll see the same with both just participating in financial networks, but also creating applications on financial networks where anyone can now do this, either through utilizing PSD2 or through blockchain. Those are sort of converging towards the same, right? And even in the case of Maker, anyone can even become a governor of monetary policy, even if you're cool underage, right? Then that's another one.
That's the cool one, actually. I like to be the governor of the policy. Tomasz.
Okay, from the banking perspective, I would like to say that bank will copy everything what challenger bank and fintechs have done so far. It's true. But they will not be able to copy one thing, one segment of our operational activities, cost base. Mm-hmm. Of course, there are some new technology like AI, machine to learning that will help them to lower the cost down, but still the cost base will be a big burden for banks to be more nimble, more customer savvy, etc. And fintech-wise, of course, the fintechs, challenger banks, in general, are very good in bringing disruption, innovation to the market. Unfortunately, they are not very good in terms of viable long-time profitability plans. So I assume that most of the fintechs and challenger bank will not be here with us in next 10 to 20 years. Therefore, at the Cashap, we have to put a lot of emphasis of our business model, how we earn money, because we ultimately think this is the thing that will push us forward, and so we have to focus on this and most of our attention.
Let's focus. Krzysztof.
I believe that the future is good ideas, well implemented, and well, let's say, provided to the market. It's like looking at the past at Blue Media. Years ago, a top-up service was provided, but it was done with banks. And still, in most of the banks in Poland, you can top up the phone with Blue Media service. Sure. Then it was like, among many products, first instant payment in the market. So for the first time, but it started when we started to cooperate with the banks, and it was speed up very much. Now it's like autopay, and definitely I promise there will be new products also.
Perfect, good ideas, well implemented. Thank you so much. Thank you for attention.
Thank you.
Thank you. Thank you.
Sylwia, dzięki wielkie za to, że jesteś częścią tego wydarzenia. Dziękujemy też za Miłoszowi Brakonieckiemu i ekipie Obserwatorium, którzy pomogli nam zbudować line-up tej sesji. Bardzo się cieszę.